another counter that is doing particularly well on the back of its results for the second quarter of the calendar year, and I'm talking about Schaeffler India. Just take a look at that stock. It's up as much as 5%, or in fact 5.7% at this juncture. Net profits have come in 76% higher, revenue is higher by as much as 42%, and margins have expanded. We're joined by the management of Schaeffler India. We've got Harsha Kadam, who is the Chief Executive Officer and Managing Director of the company, joining in. Harsha, thank you so much for taking the time. Could you give us a sense of the top line growth, which is coming at over 40%? What are the factors that led to this, and can we expect that volume momentum to carry through in the remainder of the financial year as well?
Yes, we did have a reasonably good second quarter performance. We saw revenue growth almost 11.6% better than the preceding quarter, and almost a 40% growth over the same period last year. Having said that, all the business areas of automotive OE technologies, automotive aftermarket, as well as the industrial, all posted almost close to double-digit growth rates. We saw a strong traction coming in demand from some of specific sectors, and if I were to name a few, the passenger vehicle sector, we saw some recoveries, and with our strong presence in the engine and transmission applications, we saw some phenomenal demand coming there. On the industrial side, we saw some of the sectors like power transmission, even the two-wheelers saw some traction there, and we were able to leverage and grow. The railways, we did see some tractions of demand coming up, and we were able to leverage better. Even the export business that we had did reasonably well. So all in all the business areas have performed well. In addition to that, we definitely had a few key business wins during the quarter. These were projects which were in the pipeline, which have culminated into business realizations, and that helped us to also post good numbers during the quarter.
Hi, good morning. So this is Cheryl also joining in the conversation. Let's talk about the headwinds which you've seen due to the input cost pressure, and we're seeing that the inflation continues to linger. If you look at your margins, they did go up on a year-on-year basis. So do you expect the margins to be under pressure in coming months, since we are seeing the rise in the input costs and the inflation still staying high, or will the margins start increasing, going above the 20% mark?
As you can see, the second quarter, certainly we saw pressures building up on the input cost, particularly from steel prices that started to go up again. We had a similar scenario with the drastic increases in steel prices last year. And this quarter too, we saw some resurgence there. Having said that, certainly you have seen the impact of that on the margin was felt, although it was a marginal decrease, a fractional decrease compared to the preceding quarter. But we believe that we have actions in place to try and recover, like we did last year. Most of them we try to recover. So hopefully we will try and recover the steel price increases that have come in this quarter too. Efforts are on in this direction, but I also want to highlight here that the countermeasures that we have put in place in terms of our overhead cost management still continues to hold good, and we will continue to chart the course going forward as well.
All right. Now, Harsha, the company executed a business transfer agreement with Capex India for the sale of its chain drive business. Could you give us a bit of detail about the transaction and the rationale behind it, and also whether there are any other divestments that are planned during the year?
Well, this is a strategic direction with the technology shift that is happening across the globe. With the automobile technology shifting from the IC engines to electric motors and electric vehicle. So this is clearly a strategic direction that Schaeffler is also moving into. While we have been acquiring the competencies and are building up competencies and starting to get into the electric motor, electric technology applications in the mobility sector, we also have started to revisit our existing portfolio of products. And we have identified some products which we believe that technologically we have to start to divest and move out. So the chain drive business is one step in that direction. Also, the transaction in India was a small thing. The turnover of the business was just about 100 crores, and that's something we executed in second quarter. But our support to the customers continues to remain, and we still continue to work with Ketensis to ensure that the customer lines continue to run smoothly on all the products that were divested.
Right. Right. Let's move on and let's talk about the capex plans that you have and also the product pipelines or product launches that are in the pipelines for the current year.
Well, as you have seen in the second quarter, we have increased our capex spend in the quarter. It was almost close to 8% of sales, which hitherto used to be about 4 to 6% of sales. Clearly, we are committed to invest close to 400 to 450 crores every year going forward as well. We have a clear strategy to continue our capex investments. Both in the existing product portfolios which feed the industrial market, not just for the domestic need, but also to export out of the country, leveraging the best cost competitiveness that prevails in India. In addition to that, some of the investment definitely is targeted towards some of the new product portfolios that we want to bring into India.
All right, Harsha, thank you so much for taking the time and pleasure speaking with you on ET Now.